Hey folks, happy Friday. And what I'm going to do is the only trade I'm really watching today is the eBay, and it's gone up to 53.23 and it's not hitting my 53.5. So I'm not doing anything to it today. And there are several trades that I'm looking at for Monday, but nothing for today. So I thought I'll do something different today. What you're looking at, if you're if you're looking at the screen for the first time, don't panic. This is the futures screen on Thinkorswim. The way you get to it is you come to the trade tab and then you come to the active trader, and that's the futures. I don't know if any of you do futures, but I use futures mostly if there is some overnight news happening coming out of Asia or something like that. You get up in the morning and see there's chaos going on in either Asia or Europe. And then if you have some positions, you can use the futures market to do a hedge. I actually have two very good courses in Module 6, I believe. Module 6 and Module 7, I think. One is on futures trading and the other one is advanced hedging using futures. So if any of you are interested, you can look that up. Now, what you're looking at here is the futures screen. And, you know, in futures, it's just like a stock. So you have unlimited profits on the upside and you have unlimited losses on the downside. So what we're looking at is the ES product. In the futures market, the S&P 500, it's called an E-mini. It's the /ES product. And you can see this is the S&P futures right now. So, you know, it's at 1549. You can see that, you know, the trades happening. And what you see on the right-hand side is what you call a time and sales. So, for every second, how many futures contracts are going through is what this will show. And the good thing about Thinkorswim is you can, if you just wanted to see what the big money is doing, I will put a filter like 100 contracts. Now, 100 contracts is huge. So anybody playing minimum of 100 contracts on one single trade is all the smart money. Okay, so 100 contracts is somewhere around a $2 million notional value of that trade. So these are huge contracts. So maybe 50 contracts might be a better size. Let's see, this size is too big. Let's get a better feel for 50 contracts. And this might give you a better, even 50 contracts, that's $1 million worth of notional value. So you can imagine that people who put these trades are all the big players. So the way this works can be a little confusing to follow, but depending on, you know, if you see these two colors, now you can see that there is the red and the green coming in. So, you know, when you see red coming in, then there's more selling pressure. So you'll see the market, you'll see the S&P futures go down. And when there's more greens on this thing, then you can see that the it's actually buying pressure. So right now it's kind of mixed, even though there's a little bit more green. There's a splattering of red, and you can see this is in the last 5 minutes. These are all the contracts above 50 contracts. Okay, so these are huge players here. And you can see now a slightly bullish tone is coming in. But, you know, futures are a day trading instrument because you really don't want to hold futures overnight. And, well, you know, I mean, there's nothing called overnight because futures trade pretty much 24 hours a day, except for 15 minutes at 4:15 Eastern time. They shut it down for 15 minutes and then they reopen at 4:30 Eastern time. And that's the new day. The new day starts at 4:30 Eastern time. Like I said, we use it for hedging purposes. And you can look up the courses in Module 5 and 6. I have two courses there, very good courses, and you'll get a better feel for futures. But, you know, you don't have to play 50 contracts. You can just play one contract. So each one contract is a notional value and, of about $5,000. So let's see here now. You know, I just want to show you. So the way you would, if you were using it for hedging, let's say you wanted to hedge, so each one contract gives you 50 deltas. So the E-mini it's actually 1/2 the size of the S&P 500 index itself. So, each contract will give you 50 deltas. There are no other Greeks in the, in the futures. There's only delta. There's no time decay. There's no implied volatility, nothing. So this is like, it's mostly, it's exactly like stock. And that's how you would use these futures. The good thing about the futures is you can, it's very easy to place an order. So if you wanted to place a buy order, all you would do here is select one contract, and you just can come at whatever price, and you can put your order, and that's it, and you've placed your order, and you can see that buy order is a limit order right there. And it's not going to pay, you're not going to pay more than 1547 for it. So and this thing in the middle is called the ladder, the futures ladder. So as the S&P 500 futures goes up or down, you can see where the trades are happening, and this is your limit order. And this is great, because if you wanted to change this order, all you have to do is come here. No, my screen seems to be stuck for some reason. Oh, it's down. Okay, that's it. You click on the close and it's cancelled. You can put your order right here. There's your limit order. If you wanted to change the limit order, you just drag this thing and you put it over there, and your order gets changed right away. So, it's great in terms of getting in and getting out. It's beautiful. So all you need to do is just bring it over here, and boom, you're going to get executed for one contract. So it's really cool the way the execution works on the futures side. And there's so much liquidity, you can see, and it'll tell you there are 16,418 contracts at this price point, 11,950 at this price point, and things like that. And whenever you're dealing in futures, I would always put like a 5-minute chart or things like that, so that you know what the immediate trend is. It's very important to know the immediate trend, because futures are a day trading instrument. And let's say I'll just execute an order and show you. If I put it there, I'm probably, I got executed right there. So you can, let's go to our monitor tab now and see the futures right here. We've got the futures. So I've bought one contract, and I've bought it, and my margin here is about $4,000 for this particular futures contract. And let me close out some of these so you can see just the futures. And you can see for each 25 points, and the futures trade in 25-point increments. So you can see right here that you'll have 1549.25, 1549.5, and things like that. So they trade in 25-cent increments. So that's that's your futures thing. And if you look at the delta of this futures, you're going to see that the delta is 50. Okay, and that delta is never going to change. It's always for one contract. It's always going to be 50. There's no vega, there's no gamma, there's no theta, nothing. And but you do get deltas, and that's the thing, right? If you wanted to hedge an overnight position, something is going on overnight, and you wanted to hedge it, all you need is deltas. So, if you know this beta weighting feature here on Thinkorswim, you can beta weight your entire portfolio and beta weight it to the, to the SPX. And then what you would do is, whatever deltas you wanted to hedge, you would come in the futures market, and you would either sell certain deltas, or you would, selling is on this side. You would either sell or you would buy, and that's how it works. So you can get deltas from the futures market. So let's say it's 11 o'clock, and all hell is breaking loose in Asia somewhere. Then you can come to the futures market. And if you've got to set up your account for futures, I believe. So even if you have an options trading account, it doesn't mean you're going to be automatically authorized to trade futures. You do need to put in that request for futures authorization, and which Thinkorswim is not going to deny you that. There's no test or exam or anything like that, so you can get a futures account. But that's how you would do it. And so we are long one contract right now. I don't want to really, speculate on that. So I'm going to put my sell order right there. And you can see, that's my sell order. Hopefully it'll get executed very soon. The market is right now over here, so it needs to move up by one tick, and if it moves up, there you go, it's gone. So it's very simple to execute futures orders. And there's no real strategy to it, because it's just like a stock. Either it goes up or it goes down, and either way you can't do anything about it. There's no hedging. You can't hedge your futures contract with another futures contract. Well, you potentially may be able to, but though it's basically a day trading instrument. So either if you can catch a point like this and say, hey, all right, this was a good support point. This was, because you can see the volume came in on this bar and this bar. So these are two 5 minutes, a 5-minute bar. So between these two bars, support came in, so you could potentially have taken a long trade right here. You would have bought one contract or 5 contracts or whatever, and you would have ridden this wave. And once you saw this doji here, you would come out of this. Trade. So that's how you trade futures. Hope you enjoyed it. If you have any questions or comments, please send me an email. Thank you.